Okay, welcome back. Our next panel is called Ransomware and Cyber Insurance, and we have a fantastic group assembled here today. Let me start with our moderator, Sean Hoar, who is a partner at Brisbois and chair of that firm's data privacy and cybersecurity practice. Sean has extensive experience managing responses to digital crises and security incidents. He served as the lead cyber attorney for the U.S. Attorney's Office in Oregon, and he worked closely with the computer crime and intellectual property section in Washington, D.C. He is joining us today from Portland, Oregon. Welcome, Sean.
Good morning and good afternoon, sir.
Very pleased to introduce Scott Gaddis, a partner at Barnes & Thornburg and co-chair of that firm's data security and privacy practice group. Scott's practice focuses on cyber insurance, and he's helped clients over the years to obtain more than $1 billion in insurance coverage. He also litigated one of the few court cases regarding the scope of coverage available under a cyber insurance policy. And he's joining us from Washington, D.C. Welcome, Scott.
Good to see you, Bruce.
Also very pleased to introduce Jordan Ray Kelly. She is Senior Managing Director and Head of Cybersecurity for the Americas at FTI Consulting. Jordan Ray has more than 15 years of experience coordinating incident response and managing cyber policy planning, including having served as the director for cyber incident response on the National Security Council at the White House. When she was there, she was the keynote speaker at one of our conferences. Thank you again, Jordan. She also served as chief of staff and chief of strategic initiatives in the FBI cyber division. Joining us today from Miami, Florida. Welcome, Jordan. Very pleased to introduce Joni Mason. She's a Senior Vice President and National Practice Advisor for USI Insurance Services Executive and Professional Risk Solutions. Joni is responsible for policyholder advocacy, coverage, and legal matters related to complex management liability claim, including cyber, of course. She previously spent 15 years of her career with AIG, and she's with us today from Westfield, New Jersey. Welcome, Joni.
Thanks, Bruce.
And finally, welcome Carolyn Ryan, partner at the law firm Mullen, Coughlin. She serves as breach counsel to companies across pretty much every industry and leads response investigations, guidance in governmental investigations, mitigation, and restoration services. And Carolyn's with us today from Philadelphia, Pennsylvania. Welcome, Carolyn.
Welcome. Hi, everyone. Thanks, Bruce.
All right. I'm very pleased to turn this over to Sean. Thank you, Sean.
Thanks, Bruce. Appreciate it. We are going to have a robust conversation today about ransomware and cyber insurance. And when you look at this panel with Carolyn and Scott and Joni and Jordan, I feel very fortunate to have a chance to talk with the true experts in the industry. Now, all of us know a lot about cyber insurance, but we all come from it from a different perspective because the roles we play in the industry. As an example, when I'm asked by a cyber insurance carrier to manage a response to a ransomware incident, I typically see cyber insurance as the means by which the insured can get resources simply to get from one side of the incident to the other. But I realize in talking with some of you in the past couple of days, and especially as we lead off perhaps with a couple of questions of Scott, you know, my perception may be very simplistic, and very seldom do we have any issues that arise. And so, but I realize it's not always the case. And so what we're going to do in this conversation is we have 4 general rounds of conversation. Each one has its own theme. The first theme is essentially, you know, the cyber insurance market. How has it been affected by ransomware events? And we're going to an industry professional, Joni Mason. Joni, over the past couple of years, ransomware expenses obviously have they've skyrocketed, exploded, and have a huge impact on the insurance market. How has this surge, and I call the scourge of ransomware attacks, affected offerings in the cyber insurance market?
Thanks, Sean. Yeah, obviously there's been a lot of claims. I mean, everybody on this panel has touched them in some regard, and the insurance carriers have paid out a lot of claims and have really had to make some adjustments, and they are pulling back. Some carriers are exiting the market entirely. Some are limiting the amount of limits that they're deploying. They may go from like a $10 million limit or to a $5 million limit, increased retentions, and they're looking at loss history as well from applicants. And, you know, if there has been a loss, have there been any remediation efforts that have taken place? So we have seen a lot of pullback in the market. And of course, premiums are up quite a bit.
regardless of whether you've had an incident, right?
Exactly.
And so, Scott, I mentioned my simplistic view of cyber insurance. I know you, as Bruce mentioned, you work with insureds to resolve complex coverage issues, and you've litigated some impactful first impression matters involving cyber insurance coverage. Regarding ransomware coverage, is cyber insurance, quote unquote, cyber insurance, the only kind of insurance that can provide coverage for a ransomware event?
You know, Sean, it's a funny question because for years I would be at conferences and I would explain how other policies could provide coverage other than cyber. And someone said to me, this is a group of brokers and underwriters and people selling insurance. Said, you're like the skunk underneath the porch at a garden party suggesting that other policies could provide coverage. I mean, what's wrong with you? And it's like, I think that's a mark of pride. But now when I deal with these sorts of things, the first question I get from adjusters is, well, what other insurance might apply? And so taking the words out of the mouths of the adjusters, yeah, there are other policies. I mean, some places to look, I don't want to turn this into insurance level, 903, but there are kidnap, ransom, and extortion policies that until 2022 explicitly provided coverage for cyber extortion, covered ransomware. And I'd have cyber carriers say, well, we're not paying until they pay first, or we're only going to pay you a percentage of based upon what they also owe. Some property policies actually have explicit coverage for first-party cyber attacks. Now, look, sometimes that's $5,000, sometimes it's $250,000. Sean, I know you kind of carry that around in your wallet, but small amounts that nonetheless that could help. And there are other decisions depending on how much you want to press, talking about how those policies can provide coverage. There's a decision out of Maryland federal court that said that ransomware can be covered under a property policy. And then there's a crime coverage. And there's a decision out of Indiana that talked about crime policies. And so in a perfect world, cyber policy provides complete coverage. The tower of coverage provides complete coverage. In the less perfect world where I find myself getting hired, there are questions, will that be enough? Can I look elsewhere? And then I'm even told by the adjusters, hey, you should be looking somewhere else, and I'm going to pay second.
So, Jordan, I'm going to ask you a little bit about expenses involved, because as we get into this conversation a bit more, that's obviously not only has it impacted the market from a outside looking in, a huge perspective, but also from a product level. But from a forensics perspective, depending on the ransomware variant and the nature of its impact, the nature of the information system that's been affected, the time and expense involved in responding to it can vary significantly, dramatically from one case to the next. As a forensics professional, what can you tell us that really drives the expense of digital forensics investigations?
The number one driver is the scope of the impact, right? So if you have a widely distributed network, you might have multiple locations that are impacted by a cyber incident. That's really what we see driving up time. Understanding potential impacted data that the company might have can also be a key driver of expense. If there's a huge volume of requirement to understand potential notifications that might have to be made, that's something that can often take some time. The immediate investigation can really vary as well too, trying to understand exactly what happened, how things went wrong. But usually the after carry-on effects are what drives up the cost and the length. That's looking into who do we have to tell about what happened, how do we understand what data has been impacted. Those are the residuals that tend to really increase the length. But it can be just wildly different between organizations based on the scope of that initial impact.
Right. And so, Carolyn, as we talk about leading into an incident and as maybe preparing for an incident, as outlined in some of the information security frameworks that we're familiar with, data security incidents typically have defined phrase or phases. You typically start with preparation, and then identification, eradication, recovery, and then it all starts with preparation again when you're talking about your lessons learned. What happened here? How did it happen? How can we shore up that vulnerability, make sure it doesn't happen again, that sort of thing. But from your perspective, what can insureds do to protect themselves proactively, and what can be the beneficial results of that?
Sure, absolutely. I mean, I think one of the first things, and you're going to hear this, over and over again from, not only just from a person like myself, but from the insurance industry, is, things like multi-factor authentication. Like it's across the board, right? And that's going to be not only just some of the things that, not only insurance is going to be looking at, but some of the regulators have been asking about as well. But also, what are we talking about when we're talking about investing in this particular area? Like, I always say, what are we going to be doing so you want to avoid calling me and Sean, right? Like that's the ultimate goal. You don't want to ever have to talk to us, right? So it's things like invest the money in backups, right? You want to be able to get back up and running quickly and efficiently, to the point of what Jordan was just talking about. What are the costs associated with it is, business downtime, right? So if you are able to get back up and running and you have sufficient backups, those are the kinds of things that are going to be putting a business in the best way possible. But some of the other things I always think about, like, what are some cheap alternatives too, right? What are some things that I get that question a lot because, we can talk about, multi-factor authentication. Sometimes it's a click of a button, but sometimes it's a lot more complicated and expensive. Endpoint protection solutions. 100%, right? You've got your, CrowdStrikes of the world. You've got, SentinelOne, Carbon Black, all those wonderful things that are out there, right? And by the way, I'm not a salesperson. I just say, these are, this is my day job, right? But the other part of it is about when an employee quits, get rid of their credentials. It's, how many times do I talk about, some of the things that, what are the common ways of people getting into a particular system? It's legacy, they'll use an old set of credentials that are out there. Well, you know what? Someone quits, get rid of their credentials. Simple things such as that, or, updating patches, things along the lines of that nature. Again, with the ultimate goal of never having to call me, never having to file that insurance claim, and never having to go through this entire process. But also the other part is know what you have, right? Because when you're on that phone with me the first time, one of the first things I'm going to be asking you, where's your personal identifiable information? Where's your golden tickets? Where is the one thing, where is the part of your, is it intellectual property? Like, is it proprietary information? Where is that located? Because then, then we're talking about that whole thing that Jordan was just talking about with notification and going down that road. You want to be able to best prepare yourself. So if you do have to call me, to know what kind of questions I'm going to be asking.
Yes, the most uncomfortable conversations for a CIO is when I ask, so what was on that server?
Yep. And then that long pause.
And the CEO, you can tell the CEOs at the same conference table, and they're looking at one another, and I'm on the telephone, and I know that the CIO is starting to sweat. It's not a very good conversation. So we're going to head into the second round, but what you said, Carolyn, is so prescient with regard to where we are from an information security perspective. Just a few years ago, multi-factor authentication was some would perceive it as a discretionary spend, especially heuristic-based endpoint detection and response. It's like, it's far too expensive. We'll do that maybe fourth quarter next year, but we don't need it now. Now we see those as a basic information security controls. But also when we go back to a layered defense, that whole concept of making sure you've got a good layered defense, and we go back to maybe the 356 controls under NIST Special Publication 853, my favorite, but we look back at some of the basic things that we forget about, security patches. And then we had the Microsoft Exchange incident, and those companies that didn't patch within 48 to 72 hours started to see ransomware. So the bad guys are getting those same alerts. They're sitting there on Patch Tuesday wondering what's going to happen and what they can attack. And so we've got to be very, very careful about it. And so we're going to shift into cyber insurance as a product, how it responds to ransomware events and how it's changing. And we may talk about a little, security controls along the way. And so I'm going to go back to Joni. Joni, we've seen what appears to be a real significant impact, obviously, on information security awareness, which we found manifests itself now in discretionary spend that we didn't see before. It may also be driven, as we hear from, I know Carolyn and I, I'm sure, are dealing with insurers who are freaking out because they've got their annual renewal coming up, and all of a sudden they realize that they haven't implemented their MFA, or they're considering an EDR tool, but maybe it's on the second quarter budget, and they're going to be way behind with regard to the renewal. But what can be driven and what is being driven by the cyber insurance underwriting process from your perspective?
Yeah, so the underwriting process has become much more technical, and organizations can expect questions about their security controls and practices, all of the things that Carolyn just talked about. The underwriters are going to ask about, and depending on how you can answer those questions is really going to depend upon what kind of offerings you're going to get, what kind of premium increase you're going to get. I mean, as you mentioned, Sean, there's increases in the market across the board, even if you have no losses, and you're a good risk. But I think the carriers are ranking the risks, depending upon what kind of systems you have in place and controls that you have in place. So the best thing to do is get out ahead of it, as I think Carolyn and you both mentioned.
Yeah. Scott, the logical outcome of increased expenses due to ransomware may be increased scrutiny by carriers on the resulting claims, one would think, at least from your perspective. Because for me, and I think with Carolyn, we want to make sure we've got the great relationships with claims counsel and have protocols in place to make sure every incident it just works seamlessly, right? But we don't always see the stuff that you see. And so you're going to jump into it when things don't always go that well. So I'm going to ask you, how common is it for cyber insurance carriers to use outside counsel now in the claims process, I guess the claims investigation process and adjustment process? From your perspective, is it a relatively new convention, if you will, to have claims counsel participate in that process?
It's becoming significantly more common. And it turns out, that I think you couldn't get a job as a janitor at a cyber insurance carrier without a JD behind your name. And nonetheless, they're turning to outside counsel to investigate, handle, adjust the claims, which really makes for a fascinating ethical analysis, fascinating maybe just only to me. But an adjuster is supposed to handle a claim putting the policyholder's interest at the same level as the insurance carrier's interest. If you've got outside counsel adjusting the claim, and there are a lot of lawyers doing this work, how do you see yourself as representing the client to your ethical obligations while at the same time putting the policyholder's interest at the same level as the carriers? And maybe I'm just too cynical for that.
So
anyway, the short answer is, yeah, it's happening a lot more often.
And so who's got the duty to whom there? It seems to be a little odd to me. I know when Carolyn and I pop into something, we parachute in, and our duty is to the insured, right? It's an exclusive attorney-client relationship. Are you suggesting there's something that goes beyond that back to the carrier? How does that work?
So it makes for a pretty remarkably deep analysis in terms of privilege and obligations. So you've got privilege as to between the policyholder, its counsel, and a claimant. And you have questions of privilege as to the policyholder and its counsel as to the carrier. And if the carrier, in setting forth its position, says, okay, you're covered, the policy's triggered, you're covered, no problems here, then there really should be a complete alignment of interests. Mm-hmm. And there shouldn't be a question of, well, why, what about the communications with the carrier's outside counsel? Everything's totally aligned. On the other end of the spectrum, if you have a situation where the carrier's outside counsel says, hey, look, we're investigating, we don't think there's any coverage here, but you're free to give us whatever information you have so we can evaluate things. Would a claimant then say, because I'm never going to admit it's not privilege, but would a claimant say, well, hang on a second, there was no alignment of interest there? That's not privilege. There's no shared privilege there. But then what happens significantly more commonly is this in between, the gray area of the insurance carrier, particularly if they've got outside counsel, says, okay, well, the policy's triggered. Here's a 7-page single-spaced letter, of which the last 3 pages consist of the places where we can deny coverage and say you're not covered later on. So now what do you do as the policyholder? Do you treat the communications as privileged? And which state's law applies? And are you in federal court or state court? And are you at risk for that? And that's where there's a lot of hand-wringing on behalf of the policyholder who does not want to have someone successfully argue that privilege was waived and wants to give the carrier information that the carrier says that they need, and balancing those two things. And that is always challenging. And in every adjuster I've been involved with via outside counselor inside says, oh, we need this information and you need to give it to me and I need it, or otherwise I can't evaluate coverage. And then some more aggressive ones. And if you don't give it to me, then you've breached the contract's cooperation and consent clauses. So you better. Right. And now put yourself in the shoes of the policyholder. I'm getting a demand that if I don't give information that's extensive and privileged and work product over, then I get no coverage or I've breached my contract. Whereas I could have claimants saying, give me every document you turn over to your carrier, when the carrier said that we don't even think that there's coverage in the first place. See, this is why I get the reputation of being the skunks, John.
It's going to just continue to get more interesting, I guess, right? All right. So we're going to shift to Jordan, talk a bit more about information security and proactive work. Jordan, we've seen a tremendous uptick in the past, probably 8 to 10 months or so, in the provision of proactive information security services. And we're finding that it's in part education, what we read about, what we hear about, association conferences, et cetera, perhaps how peer corporations have been affected by large information security incidents, and perhaps maybe what the insurance industry is now doing with regard to the underwriting process. But how much of the proactive work your team is doing for clients relates to an increased focus on security controls by cyber insurance carriers during the underwriting process?
So it's certainly a factor that causes organizations to realize that they might need to have some outside help come in and improve their cybersecurity processes. I don't know that it's as much of a driver as we might expect it to be. Probably the two key drivers of folks coming to my team and looking for help proactively are regulatory action. So knowing that they need to be doing the right thing under some type of regulatory regime, or they've had an incident. So that tends to be, maybe they've already got the incident under control, but they realize they haven't done enough to remediate their actual overarching cybersecurity plan. I think we'll probably continue to see that increase, that they'll look at what they are going to be able to get in terms of cyber insurance coverage, and they'll make decisions about their investment in proactive work. But we haven't seen it be quite the main driver that we see other regulatory regimes really pushing that type of activity.
Right. Well, I know you probably are. Since you are working with forensics, that you're probably an evangelist for some of the key security controls that we've recently seen. We just talked about MFA or EDR tools. Yep. And we've seen, I know we've had a lot of insureds who are in the process of going through that process, that underwriting process, and all of a sudden they see the questionnaires where they're asking about having deployed MFA, and also now EDRs, where the last 2 years or so, it was really just a discretionary spend. Are those the two primary controls that are a different focus now in terms of regulatory officials asking about them, or are there other controls that are in play now that you may not have seen recently?
You know, obviously those are really important, but I think that really different organizations tend to focus on the implementation of different controls, and they're driven by the legacy nature of their business. So in some organizations, it's really difficult to have MFA successfully deployed across the organization. They'll say, can we do it for everybody, but not the executives? Or can we not have our third parties be a part of that? Even having controls related to mandatory cybersecurity training can be difficult to see really excellent implementation in some organizations, depending on kind of the nature of their business. Probably another control that I continue to see be a driver of difficulty for many of my clients is a true understanding of their asset inventory, right? So you can't protect what you don't know that you have. And so that sounds so boring, but the concept of the inventory of your assets is just so foundational to your ability to do good cybersecurity work. And so that's harder than we think it is. We also recognize that many times we've implemented really secure systems, and so that might make our lives more difficult as employees. So we figure out ways to go around that, whether that's rogue Dropbox accounts or other types of systems that people are storing data on, that sometimes the CISO and the CIO might not have the right kind of knowledge of that. So that true asset inventory is a place that I see a lot of people struggling to get their arms around that so that they can really be successful in that proactive work.
And the challenge with that, I'm thinking about information systems that actually do get encrypted in the process. And unfortunately, there are so many automated tools that information technology personnel rely upon to determine what assets are actually connected to the network. And all of a sudden, when you go black because you're encrypted and you have no idea and you have nothing written down on hard copy, oftentimes you're really running blind during an information security incident. And so once again, you're kind of back to, we don't really know how we're impacted because we don't know what we've got on our network because it's all digital and it's encrypted, a whole separate process. So Miss Carolyn, we're going to move over to you and just maybe asking another question. I may be asking the same question in a different way based on what your experience has been with clients experiencing certain things during the annual renewal process. Now, what we're seeing appears to be a logical impact of ransomware in the insurance industry, but what are you seeing?
Yeah, I mean, I think across the board, I mean, ransomware, of course, is the one that we've been talking about a lot. But I'm still seeing, wire transfer fraud issues, right? And I'm still seeing business email compromise. I mean, we keep internal statistics, and we literally have seen an increase in business email compromise over the past year, right? So this is something that is certainly going to continue, and we would expect to continue in 2022. And just thinking about, I was thinking, when it comes to these kind of situations, we're also thinking about the three main factors when it comes to ransomware, right? What is driving that from a ransomware perspective? But it's a similar conversation, even just thinking about business email compromise, right? Because what is the number one, one of the number one things that you talk about when we talk about ransomware, right? How do the things happen? How does this happen? How does it start? We talk about remote desktop protocols, right? Open to the internet. It's one of the first questions that we ask about when we first get on the phone, but that's one of the ones that's like a check the box, right? If it is, that's, one of the first things that they'll, open the door to get in, right? The other one would be software vulnerabilities. So we talked about patching and things like that before, but even just thinking about, some of the vulnerabilities that they could get in there, or, a weak password associated with some of the software that you utilize, open the door to get into your systems. But the other one is phishing attempts, right? So that the same thing is going to continue for business email compromises as well, is that, when you have a phishing attempt, and the education of employees is always really critical. It's one of the things we all talk about over and over and over again. But when it comes to phishing attempts, we've seen a lot of malware attached to it. And that's, another opening the door for ransomware. So certainly one of the things that I would expect from the insurance industry, and that's something that we do continue to see, is the education piece, right? You're the first line of defense. Employees are the first line of defense. So certainly I would expect that to continue, and those questions to continue from the insurance firm.
Right. Well, that's great. We're, obviously we're here to talk about ransomware, but when we think about the drivers of ransomware itself, it's not because cyber insurance is out there or anything else. It's about the ability to monetize the data, whether it's encrypted data or disclosed data, regardless of what assets the business has. The bad guys are out there to take whatever they can, much like a business email compromise, where it's not necessarily the data in the account, but it's a secondary access to funds. It's the wire transfer stuff. We still, like you, we see millions of dollars going out the back door every week because the bad guys know that that's how they can monetize that approach. Just like the W-2 image exploits that where the human resources personnel are still getting targeted years after we thought that door was closed, but it remains open. But all right, well, we're going to shift to the third round of conversation, which really has some more to do with incident response resources and the implications for their use having to do with cyber insurance. And I'm going to go to Joni for this, kind of going back to Joni about talking about cyber insurance policies and potential vendors associated with the policies. There's a number of implications of vendors when they're not used by an insured, or how they're used by an insured. Meaning that if there's a claim or a loss, what are the coverage implications or consequences of using vendors or counsel that aren't approved or not approved by the cyber insurance carrier?
Yeah, so the consequences are that you can really jeopardize your coverage entirely in some cases by not using the pre-approved vendors. The carriers over the years have become much more strict about the vendors that are on their list and that are pre-approved. And believe me, I get the phone calls and I get, well, we've used this vendor because we were in an emergency situation and this is who we know and we like, and now we need you to call the carrier and get them to pay for it. And that is increasingly becoming—
Call Scott.
It's increasingly becoming much more difficult, right? Because they've got these lists, and the consequences that they have actually been saying, we're not covering it, we're not paying for it. It was in the policy. What I've also seen is that some carriers are now actually putting it into the policy, which really takes it out of my hands, where they'll say, okay, you don't have to use panel, but if you use a panel firm, you've got a $10 million limit. If you use a non-panel firm, you've got a $5 million limit. Or it could be that you have a different retention depending on whether it's panel or non-panel. So it's really, at the insured's risk if they do not use a pre-approved vendor. I would say, there's a couple things. One is, making sure that list that's in the policy gets in the right hands of the folks that are going to need it when and if there's an incident, right? So that they know who's pre-approved. And it's something I know that we go over with the clients at the renewal process, but it doesn't always get in the hands of the exact person that's going to need that information. And then the other thing I would just add too, I mean, if there's a particular firm or vendor that an organization wants to use, raise it at the renewal process or at the purchase point where you can get them potentially added onto the policy. And the consequence of that is that, sometimes you may be able to get your preferred vendor added on, but it might be at a capped rate under the insurance policy. So the organization is going to wind up paying the difference. But it's really critical to have the awareness of those vendors ahead of time and the consequences of, not engaging one of those vendors.
If you don't mind, just to ask you just a little bit more about that. Obviously, there are a number of things you as a broker will go over with the insured in the renewal process, or perhaps if they're applying for the first time. And oftentimes it's first, understanding their business model, understanding what data sets they may have to protect, the liability associated with some form of a potential incident. How often, however, are vendors talked about in that process? Because obviously, like you say, if you've got a relationship with somebody that otherwise might be well suited to respond, and they're not on a panel, you can seek authorization for that. But how often is that done?
I think it does come up, and I've seen carriers accept it. But, like I said, it'll be at a very reduced rate. When we've had I've seen some law firms be, endorsed on, but it's the rate cap is a fraction of what it's actually going to cost, right? So it's just something to be aware of. Some clients, that's just, they want what they want. So they're willing to take that, that risk or that, that delta on their own. But, it is something, because of how strict the carriers are being, this does get spoken about at the, purchase or renewal process.
Right. Okay. All right. So, Mr. Scott, we're going to come back to you, and we're talking a bit about privilege and the tremendous value that outside counsel can bring to the management of a data security response, right? So one of the reasons the use of outside counsel may be recommended during the response is that certain communications and reporting can be protected, if done in proper way, as confidential under the attorney-client privilege and the work product doctrine. So how does the privilege, you started to get into that, and you may want to expand that in this part of the conversation. How does privilege between the policyholder, response counsel, and the insurance company work, especially when the insurance company is using outside counsel to adjust a claim? And if you want to expand it or go on to a slightly different direction from what we talked about, feel free to do so.
Yeah, it's a really sophisticated question, and there are a couple of privileges that are at issue there. First is the privilege as to coverage between the policyholder and its counsel. And remember that even someone that is assigned by the carrier as panel counsel, ultimately the policyholder is the client of the law firm. And so, and an ethicist would say, well, then that lawyer is not supposed to take a position that would harm the client. And some might say that would include not revealing confidences that would affect coverage if there's a real coverage dispute. And then there's a question of privilege between the client, the carrier, and as to third parties like consumers, regulators, business partners. So in ransomware, invariably a business partner bangs on the table and says, I paid you all this money and you didn't give me the stuff because you were you were unable to do so. And will there be a dispute there? So then how does the privilege work? Well, if the carrier is doing right by the policyholder, of course, this is my personal opinion. Carrier's doing right. They're saying everything's covered, no worries. Then under virtually every state law, there's a shared privilege that communication between the carrier, the counsel assigned by the carrier, and the policyholder should remain privileged as to that third party claimant, the business partner, whoever. Again, the real issue comes up in that claimants will sometimes try to exploit it. And I've seen it in litigations, underlying litigations, class action litigation, whatever. They'll say, hey, give me all the communication between you and your carrier. And you've got a great argument if the carrier says, yeah, you're covered, don't worry. But if the carrier starts saying things like, well, here are all the reasons we think it's not covered, and really putting the policyholder on its heels as to a question of coverage, then claimants would say there is not an alignment of interests. And so if there's not an alignment of interest, they would say, then therefore the privilege could not have been maintained because you gave privileged information to someone with whom you were not totally aligned. And there's not a flat out easy answer on that. And then people say, well, what about the brokers or other parties or other, I hate giving this answer because no one likes to hear it, but it really depends on the state law that applies. Right. But it requires the policyholder and counsel to zoom out and say, hang on a second here. Okay. For example, Pennsylvania, there's a Pennsylvania case a few years ago that talked about this exact issue. And it said, well, if the carrier says, I'm not going to cover things that are outside the policy period or things that we've decided as a state are not insurable, such as, for example, if a state that says punitive damages are not insurable, then that is not a reservation rights that breaks the alignment of interest. But if the carrier says, well, the claimant said that you engaged in intentional conduct that we can't insure, or alternatively, you were just merely negligent, then there becomes more of a question, some people would say, because the facts of the matter and what would be in dispute with the claimant and what's in dispute with your carrier start to have a real issue where if the carrier says, well, hang on a second, they've said that all you've done, and it seems like everything you did was you acted intentionally, or you misled us in the application, or other things along those lines, where a third party would try and seize upon that and say, hey, there's no alignment of interest here. That's where you run the risk of someone going into court and saying, I get all their documents, I win my motion to compel. They can't withhold them as privileged because there wasn't an alignment of interest. Now, again, this is not me saying that's right. And this is not me saying it's not privileged. I don't think so at all. I would always take the position that it is privileged, but that's the concern that comes up in trying to make certain, like you said, Sean, like trying to make certain by hiring a lawyer to handle the investigation rather than hiring a forensic firm directly. Most people would argue, hey, you have a significantly better shot of saying that's privileged and work product and protected against disclosure.
All right, Ms. Jordan, ready to come back to you?
Sure.
So forensics and restoration services are obviously central to a response to and recovery from a ransomware incident. And we've seen in recent years where initially you had solely responsive services that would be likely covered by insurance. And then at some point it became clear that the more you invest, if you will, in the restoration process, perhaps the more you can kind of limit the claim if you can do it more quickly and efficiently. And so we've seen an expansion of coverage. But now with a tremendous expense in the last couple of years, maybe not so much. But at this point, what services provided by your team during the incident response process are regularly covered by cyber insurance?
I think the answer that is probably the safest one is to say it depends. I think Scott hit on a lot of the important things here. Generally speaking, we're going to have some amount of time for hours of investigation of what happened, some immediate containment, eradication, getting back up online. But we need to be really specific about that at the outset of an incident. So that means we're going to be working with breach counsel, with the carriers to come up with both the activities that we're going to perform and confirm that there's going to be coverage, as well as some estimated times that we think those activities will take. So the coverage of what you have depends, of course, on who your carrier is and what type of policy that you hold. But the thing that we try to strive to do is to just really be on the same page up front, because we certainly do not want to be in a situation where we've made it more difficult for our client to get appropriate coverage paid for under their policies.
Right. Okay. Do you see a delineation, though, sometimes between, say, purely responsive services, meaning that literally trying to contain, deploy an EDR tool versus restoration of the network itself, or do you see that part and parcel of the response based on the carriers you're working with these days?
I would say as a practitioner, it can feel difficult to separate those, but certainly there can be differences under policies that will want them split out. And it's not to say that there won't necessarily be coverage for both, but they think about it in a different way. And so you want to be really careful that whatever provider you use for technical services, and of course, your breach counsel and the carrier will help you with this, but that they're being very specific about the tasks that they're undertaking and that they're not moving too much into kind of long-term security process improvements that might not be directly tied to the incident until you're all on the same page and you've discussed it. Because while the coverage might exist for both, it's really important to be explicit about the activities that you're undertaking to ensure you don't have problems getting paid.
Right.
And Sean, can I shoehorn
Please.
my way in here?
Please.
You may see situations like not that I would be talking about anything I've seen in the past, but like if you've got a sizable retention, a carrier saying, well, the investigation surely was for evaluating privacy obligations and it had nothing to do with your business interruption. So therefore, you have to eat a $250,000 retention for the privacy part, and it doesn't count against your business interruption coverage. And if somebody were to respond and say, well, hang on a second, are you suggesting that there was no need for incident response in terms of what caused this and how do we resolve it? You might be surprised that someone might say, well, yeah, of course. Why would you even need to do that? It was ransomware. You know what it was. Just move along with your life. I wouldn't be talking about anything in particular, not certainly any examples. But those are sorts of things that people might be aware of.
Sure. Wow. Interesting stuff. All right. Well, so Miss Carolyn, here we go. You and I know your team works closely every day with Cyber Insurance Claims Counsel. And so as we're talking about thinking about, okay, how do we finish up this round of questions with regard to cyber insurance product, its applications? I thought, a key question that oftentimes you and I might overlook because we live it every day, right, is what are key actions that outside counsel can take to increase the likelihood that things will go well? Meaning, what do you do? What kind of protocols do you exercise every day? Probably just naturally, because you've been doing so much of it for so long, that you know how to work with claims counsel during the response process to make sure that that process goes well as the subsequent claims, payment, if you will, so that it doesn't end up in Scott's lap because it's otherwise been handled well at the outset. So what actions do you take, or can claims counsel or outside counsel take to make sure things go well?
Absolutely. I mean, I think one of the first things is, and Joni really put it home, is go with the people that are on the panel if you can, right from the beginning, and know what that panel is, right? Because I always say, let's not do, ask for permission, not for forgiveness, right? In this particular instance, when it does come to incident response, there's a reason why we get statements of work from Jordan and her team, right? We get that statement of work, we submit it over to insurance for their review and approval before we go forward with anything, right? Because so then everybody knows and is on the same page up front. So, when we talk about what's the best practice, is always ask for that permission first, right? You want to bring in a third party that you really, really like. They're the local guys down the street. You really, really like them. Okay, ask for permission first, right? Don't just go hire them and then send the bill and then ask for it at the end. Those are the kinds of things that drive up costs and then also affect the coverage associated with it. And we would never want to put you in that position.
Right. Now, rather than just the converse of those principles, are there things that you can do wrong? I mean, there's a lot of ways to do things right, I guess, as one would say, but clearly there are some things that you can do wrong. Are there other things that you've seen kind of cause things to spin out of control or really cause problems?
Yeah, I mean, I think a lot of it does have to do with, business downtime. A lot of the time, the cost the really driving costs I've seen, the largest increase in cost has been business downtime, right? And so what causes that, right, is also be upfront with your counsel as to what you're experiencing. Be honest with yourself that, hey, do we need more bodies in here? Do we need a remediation team to come in here? Do we need more more people at the helm? Because sometimes even with your, IT person, they're not the type of person who, is used to deploying an EDR solution every day. They're not also used to remediating and also bringing things back up from scratch. That's what we're here for, right? I always say my goal is always to take things off of people's plate, not put more onto it. So let me help you, right? So really, I think when that process is just be honest with yourself and know the limitations and really ask for help.
Right.
That's what we're here for.
Right. And if you're going to if you're going to map out a strategy for them to get from one side to the other, you actually need to know all the information to incorporate that into the plan, right? Okay, so we've got about 5 minutes left here. And now we're going to get into the meat that a lot of people attending this session want to know about. It's that whole regulatory stuff they've been reading about, the guidance from the Office of Foreign Asset Control. And so for Joni, let's come back to you. Regulatory scrutiny's increased substantially. We can all agree upon that, because of ransomware matters. Have the Office of Foreign Asset Control advisories recently regarding facilitating ransomware parents from the Department of Treasury affected ransomware insurance claims handling?
Yeah, it has. The policies, and not just cyber policies, most policies have a notice that specifically addresses, OFAC. But when the guidance came out and said even facilitating a ransom payment can put you in violation of OFAC, the carriers really, took note of that and, talked to counsel, talked to their compliance team, and, that's an issue that's become front and center now with regard to the insurance. And I think there's a greater awareness of the existence of it right now as well. What I've seen is that even though a vendor, if there's a ransom claim and a vendor does a search and they say, well, it's fine, it's clear, the carrier will do their own search to make sure that the threat actor is not on the OFAC list.
Right.
It's just something that everyone needs to be aware about. And I think that message has gone out. I know there was a whole session on this morning as well.
Yep. All right, Mr. Scott, back to you, because this is where sometimes we have a maybe separate counsel employed by somebody to do a secondary check to make sure that the carrier perhaps has double coverage. But what are you seeing in terms of insurance issues as clients? We're going to kind of shift to as they present their business interruption and expense losses. But also, to what extent is that covered or I guess driven by this whole regulatory scrutiny?
So the question of lost business income, extra expense, beyond the ransom payment, the industry has done a remarkable job at saying, hey, here's a cyber insurance policy. Better cyber insurance policies include coverage for all of those things. They started selling them on a cafeteria style plan, which means you got to pick and choose as you went. And it's unfortunate that were some policyholders that did not affirmatively buy that kind of coverage in their cyber policy. Now a better policy includes coverage for all that. So it includes coverage for paying the ransom if you choose to, it includes coverage for paying for Sean's and Carolyn's and Jordan's of the world. And it also should include the coverage for your lost income and the extra expense you incur to try and stay in business. And then, however, becomes the world of sort of property insurance adjusting, which is the carrier brings in forensic accountants, forensic computer techs, and they look at everything that you did. And notwithstanding the fact it might be a publicly traded company, you told the market, here's how much we lost. They say, well, we're not so sure about that. We're going to take a second look at it and have a lot of discussions with the policyholder via their forensic accounting team or forensic technology team to figure out, did you actually lose this? Why and how? And were these costs reasonable based on how we view the world?
Right. All right. I think we've got probably about 70 some seconds left. So we're going to split it up between Jordan and Carolyn. So Jordan, you've obviously got a long history working with law enforcement, actually working, with the FBI for at least 10 years of your career. What role, if any, does law enforcement play now in response to ransomware incidents?
Friends who are going to talk specifically about this. So I'll be very quick and say that it depends. I think I've given that answer for everything that you've pushed my way, but law enforcement, obviously there have been a number of things that have really increased the value of that cooperation. And I think it's really important for organizations to consider working with law enforcement as an important option, and they can be a great resource of information, but it's also really helpful to improve the ability of the US government to respond to ransomware. So I very much encourage people to work with law enforcement.
Very good. And Carolyn, I may have 23 seconds or so to ask this question and get an answer. Has regulatory scrutiny changed the way claims counsel work with you in their protocols about ransom negotiation and payment?
Yes, is the answer to it. That's all I got for the time frame. But yeah, certainly, I think just increased scrutiny from attorney generals across the board. I mean, literally, we've seen an increase in, obviously litigation and things like that going across the board. But when it does come to OFAC, it is something that everybody's, continuously looking at. And, wish I had more time. I think we could talk about that all day, but
I think so.
certainly.
You guys are awesome. Thank you very much for the conversation. I appreciate it. Bruce?
Thank you so much, Sean. Terrific job. One of the main questions in the chat, Sean, was whether that was a left-handed guitar or not. Is it?
It's actually a right hand, but it's a 12 string.
Okay, well.
That's the difference.
Scott, Joni, Jordan, Carolyn, thank you all so much for your time and for your insights. This is a great panel.